Hey, good morning. Mayor Valensky with Driving Markets. Okay, let's kick off. First of all, thank you very much to all the viewers, all the subscribers, and all of those people that are watching Driving Markets have gone past the 5,000 mark of subscribers. Terrific. Let's push on onwards. I really want to say thank you to the viewers and thank you for all your comments and your support. Really appreciate it. It's not easy doing every day a video and every day a broadcast, but I can see it's popular and I just want to say thank you very much. I really appreciate it. If you can share, subscribe, and obviously pass it around your Facebook groups and your other groups you're in, I would really give me a good feeling that we're on track to being successful. So let's kick off. So the markets are moving up. Microsoft reached an all-time high. They seem to be disregarding any type of bad news out there or any type of hard fact. So not necessarily bad news. I'm not saying let's be negative or pessimistic. What we're actually saying is that the markets at the moment look overvalued. Why is that? We've got a liquidity crisis. When rates rise, there's money taken out of the economy. The US government is stopping its bond buying exercise of obviously printing money, and inflation is rock solid. Core inflation is rock solid at 5-6%. In other words, all of the interest rate action that the Fed has taken over the last year or so has had little impact on core inflation. I want to say it for the viewers, and I'll say it again. Core inflation is minus food and energy, because those are the two things that energy is very variable, and food, you will never stop buying food as far whatever inflation is at. So core inflation is solid at 5-6%. Some say higher. I personally think it's in the teens. However, let's go by the manipulated Bureau of Labor Statistics and Bureau of Statistics regarding inflation. So they don't want to frighten society, they don't want to frighten the man in the street, but let's say we go by their numbers. So core inflation is running at 5-6%, and interest rates are having zero impact, and that's going to concern the Fed, the Jerome Powell, the US Treasury Secretary Janet Yellen, and obviously all of the presidents of the FOMC and the banks. Now, it's being ignored at the moment by the markets. The AI and ChatGPT frenzy, euphoria, this FOMO obsession that people are going to miss out on the Nvidias and the AMDs and the Palantirs and the Metas and the Apples and the Goggles and whatever the case may be. People believe that they're going to miss out. That's part of the frenzy, that's part of the rise, and it's going to turn around to end up being a big bubble. .com. Okay, it's going to pop. So this pop is going to happen. It's going to be bigger than the .com crisis or the .com crash of 2000. A lot of the viewers are too young to know what went on at .com back in 2000. That was a major pop, sending the economies into recession. And this is what's going to happen today. It's going to happen not today, it's going to happen soon. They're going to have a pop of these tech companies. Now, these tech companies are overinflated, super high valued. Nvidia's got a 200 times earnings valuation. Why is it there? Anyone's guess. Let's just pump it all up, and the man in the street is going to end up holding all of the damage. You've got a real paradox here. What you've got is you've got hard, solid, fundamental businesses like the one in the US in San Francisco, just escaped me the name now, Westfield, that's it, Westfield Shopping Mall, San Francisco, closed down. What happens? They defaulted on the loan, the whole area is closed down, that commercial property is now empty and commercial property is sinking. So you've got fundamental businesses, solid, real profit businesses, or were once upon a time, going bust, and yet you've got the tech sector rising, and they've got the stock markets rising, ignoring the real hardcore businesses within the US, Europe, and obviously in the UK. The general businessman is suffering. He's not saying that business is booming. There is a recession out there, and he's feeling it. Okay, moving on to Bitcoin. Bitcoin is a lead risk indicator. being a lead risk indicator, has not participated in the big tech party that's gone on over the last few months since January. It did touch $31,500 on nearly $32,000, come all the way off. Yesterday, on June the 15th, it touched 24,800. I did say that Bitcoin at 25,000 is a big support level. It breaks below that, it's going down to 22,000. And it broke below it, bounced back up. However, it's going to go back down to 22,000. So Bitcoin is a sell and Bitcoin is going to sink further. If it breaks below 22,000, then you could see it all the way down to 19,000. At the moment, there's some sort of focus and conspiracy going on with the SEC looking to chase down the cryptos and close down Binance and stop it and regulating it out of this out of everyday life. So you'll end up with platforms like Binance unable to provide in the US any types of cryptos. That is planned by the Fed, by the SEC, in order that they can bring in their CBDC, which would give them complete control on your individual personal life. Okay, so you call me a cynic, but yes, that is the ultimate motivation behind the Democrats, the Feds, the SEC, and the financial institutions, in order that they can control their profitability going forward without having something like an independent liquid asset like Bitcoin coming in to damage the party. Okay, I'm not a massive crypto lover. On the other hand, I'm not anti-crypto. I've got to be balanced and understand what's going on. As far as foreign exchange is concerned, look at the dollar yen. Dollar yen again has moved above the 140 level. Japan is a true real bull market. As I mentioned yesterday, they've got low inflation, low interest rates, they've got looser government monetary policies, and all that is a confluence together to make Japan a real bull market. It's gone up 102% since the end of the pandemic. Okay, so Japan has become a real central focus point amongst investors, analysts and traders as a Central Asian company, a driver in global forces, and on a real bull run, where the US is a not a fake, but it's a very paper thin bull run. It's on sensitive ground. It's not deep, and it's not got no justification to it. So it's a technical bull run. Yesterday, the ECB raised interest rates by 25 basis points, the European Central Bank, and there will be increase in rates going forward. UK dollar pound cable running at 127.85, highest has been for months, right on the back of rising interest rates in the UK, which is likely to take place next week. As far as gold's concerned, gold moved up slightly yesterday. Oil is another major lead indicator when it comes to recession. Oil's been coming off significantly recently. Good sign or bad sign that we're going into a recession. Okay, follow oil and you see where the economy is going as far as recession is concerned. It's a very long broadcast this morning. I have a book on Amazon. You can buy it. It's only a short book on how to run, how to set up a business. I'm doing a longer book on trading, which I'm just writing at the moment. In addition to that, you can share, subscribe, comment. More than happy to help. Thank you again for all your support and getting past the 5,000 level. It's slow. I know it's slow, but that's the way YouTube works. Have a great weekend. Catch you later.